Hello, this is Kirill from forexboat.com and welcome back to the course on Forex trading. In today's tutorial, we will be conducting our fourth live trade on a real Forex account. So as you can see here, down at the bottom, we've got our three profitable trades that we've had so far and that have brought us $119.20. And currently on this account, I have $619.20 of available funds. So today we'll be looking at the Australian dollar, American dollar hourly time frame, and here we will be investigating a very interesting formation which we have not talked about yet. So this is a Gartley and Pesavento harmonic pattern. And before we go into detail on this particular formation, I just wanted to show you how you can read a bit more about these type of patterns. So if you go to Google and you type in harmonic patterns, and then we'll go for the images just to see them, you can find a lot about these harmonic patterns. And for instance, here is a good summary of the 6 harmonic patterns: the crab, the butterfly, the bat, the Gartley pattern, the 3 drives pattern, the ABCD pattern. So if you scroll down here, you'll see that there's a lot of examples, there's a lot of analytics around them, there's a lot of good explanations. So in this particular case, the pattern that we're going to be looking at is the butterfly, the Gartley butterfly pattern. Harmonic patterns are very interesting and they're based on Fibonacci numbers, so there's a lot of mystery around them. I used to trade them quite a lot back in the day. You can write a whole course about harmonic patterns, and that's why we won't go into too much detail about them in general. However, today we will look at the butterfly because we are working with it. So what you're looking for in harmonic patterns is either a kind of shape, candle formation in the form of a letter W for a sell, or in the form of a letter M for a buy. In this case, we have a very, very well pronounced Gartley butterfly, and the W formation is kind of just something to get your attention, but that's not actually enough for a formation to be a harmonic pattern. The word harmonic implies that there are Fibonacci numbers involved somewhere. So how are the Fibonacci numbers involved in this case? So if we take the Fibonacci retracements up over here, and then we drag them onto the very first movement in this formation. So we drag them here and then we move back. You will see that this line, 61.8%, happens to fall exactly where the retracement, the second movement, ends. So that's why I marked it 61.8% here. So, and that's no coincidence. This is a downward trend. The retracement was 61.8%. And that is a Fibonacci phenomenon, call it that if you will, or it's just a harmonic movement. So, but the interesting thing about Gartley and Pesavento patterns is that there's multiple ratios like this in one pattern. And for instance, if we keep expanding this to the right, you will see that the last movement over here, the fourth movement, was exactly 127.2% of the original movement here at the start. And these two things happened at the same time. So how do we get 127.2 from the Fibonacci ratio? Well, if we bring up the calculator and type in 1.618 and take the square root of that, then you'll see that the square root of 1.618 is actually exactly 1.272. And that again is not a coincidence. That is where all the mystery comes in. Nobody actually knows why markets move like that. Why is it exactly 61.8% here, and why is it exactly 127.2% here? In fact, this ratio can be a bit different. It can be the full 161.8%. It can be another harmonic ratio. But the fact is that there are harmonic ratios involved multiple times in these formations. Regardless of the fact that nobody knows why that happens, you can still take advantage of them and use them as strong signals for you to enter the market. So in this instance, we have a strong sell signal. Oh, by the way, before we move on, I just wanted to show you that in your Fibonacci properties, if you ever want to add a level, like for example 127.2 is not a default level, you just click the Fibo levels tab and you click add, and you can just add any level over here. So that's pretty simple. Okay, moving back to our pattern. We've got this pattern ready to fire, and one more thing that it actually gives you is it gives you targets. So Fibonacci Gartley patterns, they actually give you targets where to set your take profit and stop loss, which is very convenient at times. So the way you set the take profit is you take this last movement, you drag another Fibonacci retracement onto it, and then you look where you have the 161.8 level, and that's probably where the price is going to go up to. Statistically, it happens that way most of the time, more often than not anyway. So you might want to set the take profit here. But in our case, we have a very strong support level, 0.8, which the price, or 0.80 actually, which the price has not been able to surpass 2 times already. So it is quite a strong bet that we will go through this level, and that's strong enough already. So that's why I wanted to set the take profit a bit closer, a bit higher up, because there's another level over here which is 0.79, which just happens to be on the 161.8 line, or just above it. So I want it to be above this other support line. So if we do break the 0.80 level, then we don't have to worry about the 0.79 level. So that's how you kind of establish where to set your take profit. It's either at 161.8% or 127.2 if you like. I'm setting it over here, somewhere in between. Your stop loss, well, kind of similar thing. If you drag the original Fibonacci retracement, your stop loss it's good to set it above the 161.8 because this acts as a resistance line. Also, we've got a strong level here, which is 0.83, and as you can see over here, 0.83 was a strong resistance line. It's also a psychological level as well. So it's good to protect our stop loss in that way. Finally, if we zoom out a little bit, you will see that we were in a downward trend, and so there is a more kind of evidence or support for us to say that the trend will continue in that direction, which is good. It's always good to trade in line with the overall trend. So right now we're all ready to set our order, and the last thing that we want to do right now, I'm just going to probably delete these Fibonacci lines. Last thing that we want to do is we need to measure our stop loss, because we'll need that for the risk calculation. So right now there's about 195 pips in the stop loss. Let's remember that number and move on to calculating our lots. Alright, so to get our lots, we have to take the risk in dollar terms and divide by 10 times the number of pips in our stop loss. Because this is quite a risky trade, we're trying to break the 0.80 level. I would rather go a bit more conservative here, and that's why we're going to take about 5% of our balance as opposed to the 10% that we sometimes take. 5% of 619.20 US dollars, 31 US dollars. Let's plug that into the formula. And so the last thing that we have left to do is to type in our stop loss in pips, which is 195 pips. So let's calculate all of this. 31 divided by 10 times 195 gives us about 0.0158. So you can round this up either down or up. I'll round it up in this particular instance, and that'll give us 0.02 lots. Alright, that means that we're ready to set our order now. So now I'm going to click the new order button up at the top here. This will bring up the new order screen. I'll just zoom out a bit so we can see everything at the same time. Alright, so our lots are 0.02, stop loss is 0.8350, take profit is 0.7950. Comment, let's call this Fourth order, we'll call this Gartley butterfly. Oh, it doesn't fit. Let's just call it Gartley butterfly, and at the start might say number 4. Alright, so now we're going to just quickly check that everything's correct, and we're going to sell. Perfect, so there's our sell order over here, and it's all in the market. We just have to wait for the price to hopefully go in our direction. Alright, so we'll leave this order alone for a couple of days, and I look forward to seeing you on the next tutorial. Until then, happy trading.